Hi everyone. Okay, it is July 21, 2023, and today we're going to be talking about buying rotation sectors while cautious on mega cap AIs. Let's discuss that. Okay, let me share that to you. Okay, it's a Friday again. We're buying rotation sectors while we're very cautious, bearish on mega caps and AI. So this happened last night. You're seeing actually red days for software and IT services, tech equipment, automobiles like Tesla, retailers. Amazon was falling. You've got actually Netflix dropping last night, while you're seeing actually a divergence where banking stocks are going up, energy was steady, pharmaceuticals like Johnson& Johnson's was actually going up, and in general, even staples were actually very strong. So you're actually seeing that Nasdaq was down 2%, S&P 500 was down slightly towards 4,534, and your Dow Jones was even up 0.47%. So there's a mixed movement in the market, as you can see. So last night, you can see from the ETFs, your semiconductor bears were actually rising, meaning the semiconductors have finally been topping out or waning a little. Your FANG and innovation inverse leverage funds were going up. You're getting a lot of shorts on the Qs or the NASDAQ going up. You're getting a few names, a little bit bearish on gold miners, but we're actually a little bit sanguine about this as we're seeing actually gold is steady. Tech bears, we're actually getting some love. Short innovation names, we're getting a few rallies as well. Biotech bears, we're actually getting rewarded. Meanwhile, people who were bullish on oil were getting rewarded, and those who were bullish on financials were also getting rewarded. So we're seeing the following things: AI enthusiasm waning a little. Prior to the earnings of Tesla and Netflix, we were already seeing a little bit of bearish divergence on most of these names: AI, Palantir, Semiconductor Index, NVIDIA, SMCI, the Magnificent Seven Big Tech. So there was a lot of bearish divergences headed for the earnings. And next week, you've got Microsoft reporting earnings a day before the so-called last rate hike of the Fed, which is another 25 basis points. The market is actually thinking, hey, Tesla's numbers were not bad, Netflix numbers weren't that bad, but how come these stocks fell 10%? A lot of people would say, well, it was toppish. Anything less than the perfect earnings results would result into a down 10% move. So in a sell-off, particularly like what happened last night, it's easy to find winners. All that you got to do is find what the market did not sell off. Some of the answers here are: SunPower did not sell off much. Rivian did not sell off. Banks did not sell off. They even rose. Energy stocks in general did not sell off. They even rose. So let me find more of the resilient ones. So last night, you've got large winners being sold off. Carvana closing at 59, dropped to 47. But notice that this was, even if it goes towards 30s, which is the 20-day moving average here, this has gone up from 3 plus dollars. So when a stock moving in a very, very strong 20-day and 50-day moving average drops back to 20-day, the bulls will still say that, hey, this market is still so strong, and people would actually generally buy the dip if and only if they really believe in the companies that they're buying. So we're not actually involved too much on the meme stocks, but I'm just saying that from a chart perspective, this does not mean that the bulls have been finished. In fact, there could be toppish signs, but there could be a lot of buyers waiting on the dips here. Now, you'll see last night and a couple of days ago, crypto linked names have started falling down. Argo blockchain for the week down 26%, Hot Mining down 13, Bitfarms down 12, Back Holdings down 8, CleanSpark down 6, Mara down 6, MicroStrategy down 4, Coinbase down 4, Right Platforms down 3, Overstock even up 1%. Take note that Overstock bought BVBY, which is Bed Bath& Beyond, which already went bankrupt, so they bought that. But you can see that for the month, most of these names have rallied very strongly. And year to date, these stocks, the same like Carvana, have rallied very, very strongly. So even if there are daily profit taking, we would say that even if that continues for an entire week next week, it still does not really say that it's a broken chart. So there is actually rotation happening. People are moving their money away from AI, away from these big winners. And where are they moving? Let's take a look at where the money is moving. Okay, so solars. Wait, wait. Not sure if you're able to hear me. Wait, I was talking. I'm not sure if I was being uh, heard. Hope that my first 5 minutes was being heard. Anyway, let's talk about it again. So, solars, actually, although they dropped 3% last night, it was relatively mild in comparison to their recent run ups. We think that solar stocks in general are still in the early stages. There's a movement on these laggards. Furthermore, we don't see a lot of sell offs or big downsides for Disney or Target. These have been attacked by LGBTQIA type of boycott memes. They've been sleeping sideways. We see that as a good accumulation setup. They're sleeping until one day we think technically they will rally. The only question though is, will they sleep 1 to 3 months, 6 months, 12 months? Nobody knows how long they'd sleep, but I do believe that there are fundamental values within Disney and Target. Now, these are the stocks that we are looking at. Notice that from October 2022 until today, you have seen Sunrun actually consolidate somewhere from 18 to as low as 15. And recently it's been breaking out towards 22 with a wide accumulation base. So we think that actually it's time for some laggards like Sunrun to move up. And with Force Solar doing well, we think that actually Sunrun upon earnings will go as high as $30. We're actually bullish on Sunrun on any dips here, back to 20, which is a 20-day moving average. Notice also that when a stock is consolidating, the 20-day and 50-day moving average are all cloistering towards a very, very similar range, which makes your downside very, very small towards 20 and 18. So Sunrun is actually one of our picks to still get in this rotation move. We're looking at Sun Power as well, down 80% from its peak. We still see a lot of accumulation, as you can see, from October 2022 all the way to current levels of about July. We're seeing a lot of buyers here at 10, 11, 11.40. And last night, this barely fell. So it was more or less unchanged. We're still actually bullish on Sun Power. And so we think actually these are the next movers over this next second half or next 2 to 3 months. We're looking at Canadian solar as well. Just to look at the sectors, you're seeing the Canadian solar is at higher lows here. Around August, it's been trading at about 28. Here from about 2023, it's just been steadily sleeping here at 38, which merits higher lows for Canadian solar. And it's just actually trading within that range. You're seeing for solar being a very, very strong performer. Pretty overbought, others would say, but it's been actually languishing here. But we think that there's been a lot of supports here at 180 or even at 170. So still a lot of buyers actually after hitting near all-time highs towards 221. So that's actually an all-time high. Pullbacks will still be seen as buying the dips for solar. Had already reported good numbers, so it's still actually on the buy trends. And Face Energy, you're seeing a lot of supports buying here at about 155. Drops on the 175 is actually, I think, a bullish note. So you're seeing actually still accumulation from about 155 to 175 for Enphase Energy. Finally, if you look at the ETF of Invesco Solar, you're seeing actually for the last 2 years, from January 2021, the high was 124, fell down 55% with very, very sharp drops here in 2022, May 2022. But ever since then, it's just been consolidating with higher lows here at about 67 and 71. It doesn't want to break down. It doesn't want to break out. But we think that finally, after a certain month or a certain 2 months, this will finally break out, but the moves will be on the upside. So it's going to be alongside on the 67 to 71 with the view that we'll go back up towards 80 to 90. Hence, we're a solar long for most of the majority of the ETF components of Invesco Solar. So let's take a look at some names that people have treated with low volatility as well. We would prefer to rotate towards companies that have very little downside in our view. It may not go up, but it may not have a lot of leeway to fall further. Here about 86, we're seeing quite a ton of supports here at 84. That actually happened during the COVID 2020 pandemic when Walt Disney's entire theme parks were shut down. We don't think that that's actually the same case today. You actually have the company's Bob Iger actually selling a lot of those assets that they believe are less than
not selling or discontinuing, for instance, some of the high content media that they were spending before. So they're actually saving a lot of cash flows these days. And I think around $1.5 billion was already saved in just a few quarters. So they're actually on track to save about $6 billion for the year, which means that they'll have a lot of cash flows. And that said, Walt Disney's actually trading here at about 84, 86. Any dips towards 80, we're actually more on the buying side. Notice also that the momentum to sell off Disney has been really going down all the few months that you're seeing here, from about April 2022 to about July 2023. So this is actually, in my view, quite a low downside volatility, low volatility as well. So we're looking to actually buy shares here, buy call options here, but long-term options as far back as 2024, given that, and deep in the money call options for these types of names, given that we're willing to really buy Disney, whether it's 80 or $70, should it actually fall. So you can sell puts or buy calls and just simply buy shares for Walt Disney. Similarly, for Target, we're seeing actually a flat sideways move here. Two things can happen. It could break 126 to fall further towards around $100. While Target is still actually on a very downtrend, you can see moving average are still very low. So there's no buy signals yet. You have to be a fast cutter if this breaks 125 anytime soon. But so far, here about 130 to 133, we're seeing actually that the only catalyst for downside here is another earnings surprise. So other than that, if earnings will be successful, this can actually break out to the upside, which has been consolidating here. So consolidations for Target, in my view, is valid to buy because of their $100 billion sales every year. And yeah, no, nothing's perfect, but with people still shopping in Walmart and Costco, we believe that people will still continue to shop here in Target no matter what. Here, let's take a look at the financials. We're seeing a breakout. As you can see, financials again, the SPY. While the S&P 500 is slowly falling down, as we're seeing actually mega caps wane down, we're seeing actually a rotation towards financials, something that happened here March 2023. Financials was falling off like a cliff. But notice with financials here, prices ratios were falling down, but the momentum was actually bullish. So we're actually in the bullish side cap for financials, and we continue to see bullishness in the banking space all throughout. We're also seeing a potential movement on energy, but on energy names, it's more about just looking and finding support somewhere here at about 0.17. It's currently at 0.18. So we're seeing like maybe just 5% downside or 10% downside on energy names. So we're actually looking to find supports on a lot of energy companies as well. Now, last night, you can see that it's obvious there's some buyers on utilities, energy, financials, some materials, and then actually some sell-offs on your NASDAQ, right? So last night, you also see some healthcare names like Johnson& Johnson move up 6% after earnings reports. So here's a few things that we are looking as a scenario. So since last night, you can see that the 385 number is actually a 1.618 Fibonacci resistance for Qs. If you would base the highs here around August 2022, so we actually extended above that August 2022 high of about 335 all the way to 385. Now, I'm not sure if we will retest the one area, which is the 335, but even a short-term pullback for the bulls would be around 357. So you're actually seeing around roughly 10% or less than 10% corrections within, if you'd argue this is a bull market. So far, the technicals are still in favor of the bulls, even if the fundamentals may not warrant that much of a move. Either way, I think that the market is, of course, the final action. So the market actually believes more in the bulls, and you have to agree that the bulls are still within the long-term trends, and you can actually consolidate drop here towards 345 or 357 and still call it bullish. Okay, so this is your Invesco QQQ at another thing. So that's last night. This one I checked it again today. Still in the overbought region with 20-day moving average and 50-day moving average. Where do we see this pullback waning out? The bears can actually continue to sell this down below 370 all the way towards 357. So let's see whether it actually hits the 50-day moving average sometime this month of August. As you can see, it never ever went below 20-day moving average since March 2023. So it's been an exaggerated euphoric run up, vertical run up almost for the QQQs without any significant pullback. Was last night the start of the pullbacks for the Qs. So billionaire Seth Klarman says everything bubble might pop soon, but he stays heavily invested in a few stocks. So he talks about a lot of the markets. He's a value investor. And what you'll notice is that these people continue to actually buy names that they believe haven't actually picked up in this everything bubble. So one of his charts, one of his stock picks is actually Fidelity National Information Services. I don't claim to know it, but I'm looking at the charts that he's buying, and we're seeing actually just consolidation here and some accumulation there. So around $50 to $60. I'm just looking at it more just to peek what other investors that are in the value space are looking at. So FIS announcing quarterly dividend. It provides tech solutions for financial institutions and businesses worldwide. So it operates through banking solutions, merchant solutions, capital market solutions. It's trading at about 2.5 times price to sales, 1.34 price to book, forward PE of 9. It helps process all these mobile and online banking, fraud, risk management, electronic funds transfer. Looks to be actually more like a solution for many banks processing. So something to actually watch out for. Fidelity National Information Services, mostly catering to banks, but the industry's information tech services. Something to study in case you want to put it in your watch list for buys. Another thing that he's been buying, Seth Klarman of Baupost Group, a very well-known value investor, has been Liberty Global. And you can see that he's buying actually at the 2020 COVID lows, the 2022 lows. So there's actually triple support where he's buying here at $16. And it actually coincides also with the 2011 lows. So whatever this company does, I think that from a technical support basis, you're about $16. Either you want to coattail him, study the stock first. But I think that even the people who consider the market as an everything bubble can still find low price stocks to buy. And as long as you're not chasing what you think is overvalued, there are, of course, every now and then companies that you can still buy. Now, let's take a look at the big short, Michael Burry. Notice that around May, he bought shares of regional banks. I'm not sure if he bought it on May or in March, but when he shared his portfolio, this was what was evident. So he was buying some Chinese technology names like JD Baba. He had a lot of energy names like Devon, OVV. You can see energy names like Coterra. You can see that he actually bought quite a lot of regional banks like HBAN, FRCB. Of course, FRCB got acquired by JP Morgan. He bought Wall, Western Alliance Corp. He bought banks like PacWest. He even bought Wells Fargo. So you can see that he also tweeted this in October 1907. Knickerbocker Trust failed due to risky bets, sparking a panic. Two others soon failed and it spread. When a run began on healthy trust, JP Morgan made a stand. 3 weeks later, the panic resolved and markets bottomed. A stand was made this past weekend, March 15, 2023. So I think he bought a lot of shares during March 15 or March 16 or March 17. And you can see that he also tweeted a following things. A good charter guide. He was checking deposits that were less than $250,000, greater than $250,000 as a percentage of total. And then he took a look at the unrealized losses percentage of CET1 or capital equity tier 1 capital. So he's looking at which companies with percentage would have the largest risk. Of course, we saw Silicon Valley Bank, SB New York, FRC were eventually acquired. So you want to actually check CMA, USB. You want to actually check all these other banks like WFC, FitB, Key, HBAN, TFC Bank. So they have a lot of unrealized losses like 40 to 60% here. And if you see that the market is recovering, these again would have the chance to recover the fastest, right? And then, of course, take a look at all the banks. And so that's what we did here. Look at the movements of the banks. The banks have been breaking out. Bank of America, we've been buying here at about 28, 29. It's now trading at 31, still actually going up. looks to actually hit 34 and 38. So rotation towards banks. It's quite evident in the charts. Now take a look at JP Morgan. Breaks out 20-day moving average above 50-day moving average. Focus on the technical charts here. We're seeing actually there's no regional banking crisis. There's no big bank crisis for whatever it is. Michael Burry was correct that since March, it seems as if the market took a stand, the market defended all the banks, and that was actually the support. People were buying JP Morgan here at 125.30. They were adding more towards 140 and now it's actually headed towards either previous highs or even all-time highs. You're seeing actually Citigroup, although it didn't actually move much around this entire 2023, it's just moving sideways. So it's just been sleeping here at 45 to 47. We think with the entire banking moving up, then the resolution is this one goes higher towards say 60. You've got Wells Fargo actually doing pretty much higher lows and higher highs since March. It's been actually trading at 37 here, had consolidated quite a few months here at $40, and after earnings did well, continued further and further towards 47. Same thing for US Bancorp. You can see all of these things. So March till a May, this even fell to new lows from about 35 towards 29, rallied back towards 35. We're still seeing it continue to push up. US Bancorp here at 39. So we'll see that people would see up and this recovery back towards 47. So watch out for US Bancorp. Fifth Third Bancorp, all of these I'm just checking using Michael Burry's charts as well, or his analysis. Fifth Third Bancorp, you can see that it's been accumulated here for around 27 all the way to 24 and recently been breaking out towards 29. Fifth B or Fifth Third Bancorp. East West Bancorp, also the same views. This went as low as 34, rallied towards 60, so almost 100% up since those March lows. Western Alliance, WAL, since those March lows of $4, this has gone 12x, which is $48, and has recently been trading higher and higher with breakouts, with supports a lot in $40. So there's been double retest for Western Alliance, $4 here, $10 here. So really quite a lot of buyers with Western Alliance Bancorp. How about Zions Bank? Zions Bank also the same thing here at 25, rally towards 32, been accumulated since March, and then breaks out further towards 38. We still see any dips here at 32 to 35 to be a buyable entry for Zions Bancorp. Look at the PacWest. PacWest actually fell to as low as $2.50 here. New lows on May. I think this was related to Credit Suisse being acquired by UBS. So this was the Silicon Valley Bank, and then the Signature Bank New York. With further, even with new lows on PacWest, there's actually a lot of buyers further buying around April and May. So we're actually seeing that there was actually risk on sentiment for the entire banking space, with $2.50 rallying towards $10. We think it could hurry. You can see all the regional banks going up. So assume that the trend will be your friend, going up in the short term as high as either 15 to 20. So still a lot of upside for PacWest Bancorp. Bank OZK, we're seeing actually Bank OZK, same thing. 38 falling to 32, rallying back towards 44. So really, it's just been moving back towards 2023 levels as if there was no regional banking crisis to begin with. M&T Bank, you can see the same thing happening. 2023 is trading at about 160 to 190. So here it avoided a crash, falling towards 110, rallying back to 140. Let's see whether this continues towards 160 to 180. Citizens Financial Group, same thing. So you'll notice the charts are repeating the same thing. Some are hitting new lows, but all are bullish divergences, suggesting a V-shaped rally here from about 26 towards either 40s or 46. Okay, you've got New York Community Bancorp. So New York Community Bancorp is actually at the same prices in 2023 as it was in about 2008 financial global crisis. So it actually already rallied from about a low of about 6 towards 12, 100% move. Whether it continues higher towards 16, the point is that some names like New York Community Bancorp were already being acquired and bought by the likes of Michael Burry during the height of that financial regional banking crisis this year. Here for Western Alliance, as we said, $4 have already gone $48. At $4, it fell to as much as 93% from its peak. So you can see Michael Burry's Sign Capital Holdings. He's shared this on May 15, 2023. But the reported values were done as of March 31, 2023. So I would assume he bought starting March. And you can see that he bought these names, New York Community Bancorp, Capital One Financial. He bought Wells Fargo. He bought Western Alliance. He bought PacWest, First Republic Bank, Huntington Ban shares. So in some ways, he did buy quite a lot of banks. And even if he lost money on FRCB as this went to zero, I do believe that he's not losing money on the other names that he's been up buying. So, for instance, New York Community Bancorp, for instance, has gone up from about 6 to 12, assuming he bought at about 6 or even 8. He's up 50% and on that position alone. So we will never know his cost. What exact price was he buying it? But my assumption is that he would have bought during that crisis the moment he tweeted those thoughts. Okay, so here for a better look, you can see all the shares that he's got columns. So you can even check the costs, right? So for instance, you can check $10 million divided by 100,000 for Alibaba. That means that his cost is roughly $100. So far, Alibaba is still around $90. We actually were also buying Alibaba at about 80 plus, $84. Still holding on to that. Some names here that I agree with, JD. You can see that JD, his cost is roughly at $40. JD can still buy it at 35, 36. So also accumulating that. And then you can see everything here, like Wells Fargo, Real. How much did he buy Real? For $800,000, he was able to acquire 684,000 shares. That means his cost is somewhere about $1.20. This is currently $2.50. So he doubled his money on Real. So you can see that his positions, some of them have gone doubled, some are still underwater. But in general, for instance, this Western Alliance, wherein he got $4 million for 125,000 shares, that means that his cost is somewhere at around um, 8 times 4, around $32. And you can see Western Alliance is already at 48. So he's up about 50%. So he's been buying those dips, as you can see, when it was happening. So some he's actually up a lot. Look at this, Devon Energy. From about March to July, we also agree that, energy probably very little downside. You can see a lot of supports, a box here at 45, and then a resistance move here at 51. So we don't know though how long these things can take. This can actually be sideways for 2 months, be sideways for another 6 months. But overall, we think that this sideways movements of very low ranges, very low volatility, which means easy to cut if you're wrong, will eventually break out to the upside once it happens. So very huge accumulation here, particularly for Devon Energy. I think it has to do with dividends and a lot of buyback programs. Earnings can be a catalyst as well, so we'll see. Cotera Energy, the same thing. You can see all of these are really just boxes from about 22 to 26. You might as well accumulate here. I'm not saying that I'm a very good value investor, but I can understand why energy stocks are being loved by value investors because they print a lot of cash flows and they're actually on a technical setup that is pretty cheap given that they're mostly trading less than 5 times multiple, less than 10 times multiple overall. This is Ovintiv. You can see the same pattern as well, 32 to 38 OVV, also trying to start breaking out. So we're actually seeing XLE is sideways. XLF has been more aggressive already on the momentum side, but this will actually, in my view, start to be rotating as well upside, with oil trading above $65 to $75 in recent weeks to months. Huntington Bank shares have rallied already. H-Bank has gone from $9.50 to $12. So a little bit late here, but it can still continue going up $14 and so on. I'm going to also share to you a few charts here on the small caps. Not necessarily Michael Burry's picks, but we've actually been seeing these charts to actually be something of note for the news in terms of events and then in terms of the setups. You see that AQMS is actually part of the lithium recycling movement, nickel recycling movement, which is part of the clean energy metals. We actually think materials are actually being acquired. This went from 60 cents to as high as $1.40. Slept like a baby here at about $1, and then recently actually had a offering at about $1.10, which we think is the support. So at current 130s, 140s, we're actually seeing that these might actually be being acquired, just like this huge consolidation for this entire 7 month span for Aqua Metals. So put this in your watch list in case you're looking at small caps. Similarly, Aqua Metals, which is in the waste management or in the recycling zone, you actually have a lot of so there's a $17 million public offering of the stock. There's been some insider buying as well. So I might as well actually just highlight to you a few things on those names. No, so at $1.10 share support, they're doing sustainable lithium ion battery recycling, public offering of $1.10 per share. Then yun, 2,373,000 shares on July 21, 2023. So look at that name. So we mentioned China tech like JD. It's been actually consolidating here. We agree the buy points here at 33 to 37. We agree with Michael Burry. We actually agree also with Google. Google is actually a position of Google actually owns a position of JD in my view also at about $40. So here at about 36, 37, or 33, we just continue to buy and accumulate JD. Think that eventually after a few months or so, you'll get these laggers to start picking up. Here, Alibaba, same thing, buying it at 83, 84, nearing $80, currently at 93, just holding on to it. It's been in a really, really long consolidation. The restructuring is going to happen maybe end of the year. So end of the year 2023, might happen 2024 for that spin-off on the IPOs, 6 subsidiaries. So still bullish here on the rotation for Alibaba. Copen is also a small cap that we want. Here you can see MACD is forming. Since about $1, we've already been noticing that it was barely going down below $1 and it's just really been accumulated. So early buyers here, we were getting at $1, 110, and then even at $2, we're still also adding more Copen for an eventual resolution with momentum towards 4 or 6. Possibly end of the year. I'm not sure when, but if there's going to be a lot of small cap movement, this will be the time for Copen to actually realize some extra values. So we'll see. But it's been bullish setup for Copen. For the real, this has been mostly just coattailing by Kilbury. He bought something in the $1.25, currently trading 250. So it's been actually 90% down from peak. I believe that he already made his due diligence, just following the charts here. You can see a huge consolidation for the real, a huge MACD accumulation here. And anytime the real trades at about $2, we're still seeing a lot of buyers coming in, just coattailing Michael Burry's trades. Here for just wanted to also highlight that we're looking at, since I said we're looking at energy, we're also looking at coal, since a lot of people would still definitely be using oil and coal plants. It's not that easy to transition to solars, although we're also looking to buy solars as well, as I highlighted in the first part of my presentation. Some coal miners like Arch Resources, we're actually seeing some supports here at about 105 and 110. And last night, this broke the 20-day and 50-day moving average, trading at 118. We think that's the start for coal plants to actually start moving up. Arch Resources looking positive. You've got Warrior Met Coal looking to actually break out here at $40. Look to actually potentially buy. Notice that MACD, HCC, or Warrior Met Coal seems to be a faster play in terms of momentum. Whitehaven Coal, which is in Australia, is also here at support, just like Arch Resources, starting to move back up on a MACD perspective. So here, moving averages are starting to move up as well, back to those previous highs from 1 to 10, consolidated back to 6. Very nice reset. Let's see whether Whitehaven Coal starts running up yet again. So in general, we've got watch lists. We are still positive on regional banks, positive on energy, positive on Chinese tech, positive on solars, positive on low volatility names, positive on small caps, positive on coal names. Forgot to show you the charts of NVT, Good RX, but also positive on that. So in general, a few things to note though. Had to listen also to some tech people. Sorry, not tech people. Have to listen also to others who are looking at the fundamentals. This is a chart from Liz Young from SoFi's. I think she's the chief strategist for SoFi. Can see that the blue line here is the Nasdaq, which keeps on pumping higher, whereas your 10-year Treasury yield inverse is actually around 4% after being as near as 1% before, or less than a percent. So far, usually when you've got high interest rates, the question is, will your Nasdaq continue to go higher? So two things happen: either your interest rate goes a cut from 4 to 3 to follow this Nasdaq movement, or actually it just stays here at about 4 years, at about 4% for your 10-year treasuries, or 3.7%. And something's got to give. So usually, when you fall, when you basically hike rates, it's gonna cost people more, and so this rally in 2023 would eventually fizzle out. So we'll see whether that happens, whether big tech will actually sustain their gains or not. Top economists like David Rosenberg are writing articles reminding that today's market mania is a dot-com and housing bubble. Consumers are feeling the squeeze. Retail sales actually came down at about 2%. In an article that he just released recently, I think just last night, we're almost like in the 1929, where stock prices have reached what looks like a permanently high plateau, maybe a bit like Abby Joseph Cohen ahead of the tech wreck, wherein she said, "We expect 2001 to be yet another year of profit expansion, albeit at a slower pace." Or how about Chuck Prince's doozy in July '07, that as long as the music is playing, you've got to get up and dance. So we're here to say that we actually agree in all these fundamental calls that the AI has really, really been, vertical and up. So we're more on the just bearish and cautious on it. But really, there's quite a lot of other avenues to park your money on, and not get killed in case everything bubble does pop. Bernanke is also saying next rates hike will be the last, which is next week, July 25. So we'll see whether that happens and how the market will react with the July 25 to 26. Market's already pricing in a very, very high 90 plus percent rate hike for next week. So whether that makes the dollar go up or it actually punishes gold, we'll see what happens. Because so far, we're seeing gold actually sideways at about $1970. That said, we can fall, SPY can fall 4-3, and the bulls can still consider it victory. We are hoping that the extended market could actually correct towards 4-3 for better setups and better rotation. And so far last night, it was very obvious that people were selling the ones that were extended. So mostly big tech, mostly semiconductors. Some news: China has been stepping up to boost the sales of cars and electronics, but this has disappointed the market because while regions are now being given stimulus for Chinese cars, this actually tells us to be patient when we're buying Xpeng or Neo in China, because the market is, of course, going to take a while to shore up that sluggish economy for secondhand vehicles, mainly EVs. Others now are reporting China's lost decade has already happened due to the real estate market. We do think that with negative headlines like this is actually ripe for us to be looking more in China. That's why China tech is something that we are particularly bullish upon to be buying. So we'll see. There are actually bearish news about Taiwan Semiconductor reporting a drop in 4 years. Could this be the start of semiconductors falling? Could this be the start that despite all this generative AI, it's not going to actually replace the demand that has already been slumping from China and from all these electronic and PC shipments? So that could actually break the hype, the cycle of hype in AI and mega caps. Looking at some coal stocks in China, they're actually sleeping, like China Shenhua. Yanzhou Coal, which is Yankuang Energy now, is still going down. So no supports yet for Yankuang Energy. For Australia's Tech Resources, this is a copper play as Sorry, this is a Coldplay Tech Resources, TECK, not TECH. Just watching how the coal energy plays are moving, and looking at how Chinese stocks of the consumer space are moving as well, like Nayuki or Cafe de Coral, looking some accumulation on these drops. Haidilao also being, seeing some bargain hunting, even with a lot of negative news in China. So in general, I would say the market is willing to buy. It's just a matter of which companies you should buy. So you rotate. I think the clear answer here is rotation is the name of the game. Avoid extended sectors as much as possible, and have some dry powder in case the markets give a huge sell off on August. Because August is actually the seasonally weak months or flat months. So whether the SPY actually hits 4-3, that would actually give you that opportunity, potentially buying better entries in case you do want to actually buy some technology names. I would prefer to actually get some Google if there is a huge drop next month for Google near 110. But we'll see whether that happens. Okay, so thank you and thanks for watching. That would be my report this Friday. And that's it. Hope that you have a good weekend as well. Bye bye.